All right, welcome back. We are continuing with our paper. We are still doing accounting paper 1. Remember, we have already done question 3 and question 4. So now we are proceeding to question 2. So if we can do question 2, it will then mean that we are only left with question 1 in this paper, which is accounting paper 1, November 2022. Remember, the paper 1 in accounting is based on companies, limited liability companies. And then paper 2 is for those other sections of our syllabus. So this paper is also very important for students to master it. It's also very important for them to do well in this paper, so that when they proceed to paper 2, they know that they have done well and they gain confidence and are able to pass this subject, such a very interesting subject. So we are now in question 2. Question 2 is based on the financial indicators. Question 2 is based on the financial indicators and cash flow statement. Financial indicators and cash flow statement. Question 2, based on the financial indicators and cash flow statement. 2.1, choose the correct words from those given in brackets. Write only the words next to the question number 2.1.1 to 2.1.3 in the answer book. 2.1.1, the director's report or audit report. So those are the options that we are given. We need to choose between the director's report and the audit report. Gives an explanation of the operations of the company during a financial year. So is it the director's report or the audit report that gives an explanation of the operations of the company during a financial year? And the correct answer to this one is the director's report. The director's report gives an explanation. The director's report gives an explanation of the operations of the company during a financial year. Remember, the audit report is the report that is issued by the independent auditors after they have audited the financial statement. So the report that gives an explanation on the operations of the company is the director's report. 2.1.2, the independent or the internal auditors are responsible for monitoring the financial control measures of the company on a regular basis. I think the key word to this question is regular basis, because it says the independent or the internal. Remember the difference between the two auditors. The independent auditors are the external auditors who comes only once at the end of the financial statement, at the end of the financial year, and their job is to look at the financial statements, audit the financial statement and write a report. So they are not there in the company on permanent basis. So the internal auditors are the ones who are in the company, they are working for the company on full-time basis. So they are the ones who can be able to monitor the financial controls on a regular basis, which therefore tells us that the correct answer to this 2.1.2 is internal auditors. Internal auditors. As I have already mentioned, that regular basis is the guide. So the independent auditors are responsible for monitoring the financial control measures of a company on a regular basis. No, those are not the independent. It is the internal auditors who monitors the financial control. 2.1.3. In the event of bankruptcy, the shareholders are normally not responsible for the debts of the business. This is because of limited or unlimited liability. If something is limited, remember the liability of the shareholders is only limited to the amount that they invested in the company. Should the company become insolvent, the shareholders can only lose the amount that they have invested, but they will not be liable to pay for the debts of the business. So the correct answer to this one is that limited liability. In the event of bankruptcy, the shareholders are normally not responsible for the debts of the business. This is because of limited liability. Their liability is only limited to the amount invested in the company. There can never be a situation when the company collapses, then the people who are owed by the company will go as far as demanding the shareholders to come and pay this money, and they may be even repossess their personal belongings. No, their liability in the company is limited. They can only lose, when the company becomes insolvent, they can only lose only the amount invested in the company. 2.2, Usanda Limited, the financial year end is 28 February 2021. Year end is 28 February 2021. Remember, the financial year is the period of 12 months. So if the year end is 28 February 2021, it means that the year started on the 1st of March 2020. 1st of March 2020. So the accounting period that we are dealing with in this activity, it starts on the 1st of March 2020 and the end is 28 February 2021. And the name of the business is Usanda Limited. Required 2.2.1, we are now doing the cash flow statement. This is cash flow statement. Calculate the following figures for the 2021 cash flow statement. We want to calculate income tax paid. So this calculation, educators normally use different methods of calculating this, but the most preferred method by myself is the one that we are going to use when we are calculating this. What I normally emphasize to you students is that you should just have one formula in mind. That your SARS income tax at the beginning should be a plus, and your SARS income tax at the end should be a minus. And that if you are asked about the type of an account, what type of an account is SARS income tax? SARS income tax is a liability under normal circumstances, but we do understand that in some instances your SARS will become an asset. So, but we are saying that the beginning should be a plus and the end must be a minus. If everything falls under liability, if the beginning is a liability, it should be a plus. In your question paper, you may see liability, or they may decide not to write it under liability. They may just indicate it as CR, which stands for credit. And if it is a CR, it's still liability. Or your SARS may appear under trade and other payables. If it is payable, it is still indicating that your SARS is what? Is a liability. So therefore, if your beginning is under liability, it will be plus, and if your end is under liability, it will be minus. So should it happen that your SARS is no longer under liability, your beginning is not under liability, it is under assets, or you see a DR sign, or it is recorded under receivables, then you need to change the sign. If it is a DR, what you need to do, you just need to change the sign. You just change the sign. So the DR it may be a DR or written assets, or maybe it may be written receivables. It's just one and the same thing. So if your SARS income tax is under receivables or under assets, or there is a sign that indicates that the amount is on the debit side, you will then know that your SARS is no longer a liability, it is an asset. And in your calculation, you will then have to change the sign. So if it is the beginning that has been reflected under assets, it means the beginning will change to be a minus. If it is the end that is reflected under assets, it means that the end will change to be a plus. So this is the formula that is followed. So income tax for the year, it is your income tax for the year plus beginning minus end, depending. But if you know this one, which says your SARS beginning is a plus and your SARS end is a minus, if everything is under liability, it will be easy Well, because if you see another thing, you will then simply just change the sign. So let us look at the income tax for the year as to how much is the income tax for this year, because we want to calculate the amount, the exact amount that was paid to SARS. If you look at the information that is given here in our question 2, if you go to the following page, there is information A there. And that information A is an extract from the income statement. But unfortunately, if you look at the accounts that are given there, the income tax for the year is not given. But we are given the net profit before tax and also the net profit after tax. Therefore, the difference between those two amounts will then be your income tax. So let us then do calculations here. Your net profit before tax is 1,777,000. 1,777,000. And your net profit after tax is minus, it is 1,243,900. So the difference between the net profit before tax and the net profit after tax will give you your income tax for the year. So therefore the income tax for the year is 533,100. This is our income tax for this year. Our income tax for the current financial year is 533. But remember, we want to calculate the exact amount that was paid to SARS. Because it may happen that the tax is 533,100, but you did not pay that 533,100. So let us then look at the amount we were owing SARS at the beginning and the amount owed to SARS at the end. If you go to information B, your SARS income tax account for the beginning and the end is reflected under liabilities, which then goes back to the formula I've just given you, that if everything is reflected under liabilities, your beginning will be a plus and your end will be a minus. So it means we were owing. The opening balance was a liability and the closing balance is still a liability. At the beginning of the year, we were owing SARS 69,300. So let us add the 69,300. 533,100 plus 69,300. If you can just quickly take your calculator, because I want you to look at something so that you may understand this calculation. If the tax for this year is 533,100, and then we were owing SARS at the beginning of the year 69,300, it means we were supposed to give what is due to SARS at the beginning of the year, which is 69,300, and also pay the income tax for the current financial year. So it means the total amount that should have been paid to SARS is 533,100 plus the amount that we were owing at the beginning, which is 69,300. So the total amount that was supposed to be paid to SARS was 602,400. But for the mere fact that there is a balance that we are still owing at the end to SARS, which is 19,800, it means we did not pay this full amount of 602,000. And hence, that is why we are following this formula, that we need to subtract the amount owing at the end. If we subtract the amount that we are owing at the end, which is 19,800, then we will get the exact amount which was paid to SARS, the income tax paid. So it will then be this 602,400 minus the 19,800. And the total amount is 582,600. So the exact amount that was paid to SARS is 582,000. Remember, when we are doing the cash flow statement, we want to calculate the exact amount that was paid. And this amount, when it is reflected under the cash flow, it will have to be put in brackets because it is an outflow. But and remember, when you are writing it in the cash flow statement and do not indicate brackets, it will then be marked wrong, because the cash flow statement must indicate the inflow and the outflow of cash. But if you did not include brackets in this calculation, it doesn't matter, it may be marked correctly. But it is important that when you are putting it in the cash flow statement, it should be in brackets. So the total amount paid to SARS is 582,600. And now we are proceeding to dividends paid. According to question 2, we are required to calculate dividends paid for 4 months. And there are 2 things that we pay normally for dividends. We pay for dividends due at the beginning, which is shareholders for dividends at the beginning, the amount that you are owing for the previous year, which is our shareholders for dividends at the beginning, plus our interim. Because the final dividend is declared in the current year and paid in the following year. So it means, let's say the business is starting this year. We are starting this year to operate. It means the dividends that we can pay, because there are 2 dividends per annum. It is the interim dividend and the final dividend. It will mean that in the current year we will only pay the interim dividend, because the final dividend will be declared towards the end and will be paid in the following year. And then in the following year, the final dividend will then be the amount owing at the beginning plus the interim. So what we are therefore saying is that if you look at our calculations here, if we look at the shareholders for dividends at the beginning, it is given in information B. Our shareholders for dividends at the beginning, the amount that we were owing shareholders at the beginning of the year was 247,500, which is the final dividend for the previous year. And therefore we need to pay interim dividend for this year, because the final dividend for the current year will not be paid in the current year, it will be paid in the following year. So we will only be paying the amount owing at the beginning plus our interim dividend. But when you look at information D, unfortunately the interim dividend was not given. The transaction was only saying an interim dividend was paid on the 31st of August 2020. And if it was paid on the 31st of August 2020, we are not told whether it was 10 cents per share or that the transaction is just completely silent. But the final dividend, we are told that it was 20 cents per share was declared on 28th. But remember, the final dividend, we do not pay it in the current year. So now we need to get the interim dividend. And the only clue that is given to us here is the total dividends for the year. The total dividends for the year amounted to 835,000. The total dividends for the year amounted to 835,000. These are the total dividends. These are the total dividends. And we know that the total dividends are made up of interim plus what? Plus the final dividend. And fortunately, we do have the final dividend, which is shown as shareholders for dividends at the end. The final dividend is 340,000. The final dividend is 340,000. So now if we know that the total dividend is made up of interim plus final, so it will then be easy for us to calculate how much is the interim when the final is given. It will just simply be 835,000 minus the 340,000, which will then give us 495,000. Our interim is 495,000. So this calculation, you can just do it here. You may decide to just add the interim of 495,000 in this calculation, or you may just add the total dividends as given, which is 835,000, but subtract the final of 340,000. You will get the same answer. So 247,000, it is 247,500. 247,500 plus 835,000 minus 340,000. And the answer is 742,500. The answer is 742,500. 742,500, which is our dividends paid. And if one has worked it out separately to calculate the interim, then you can just then come here, take your opening balance plus your interim. It will give you the same amount. If you can take this 247,500 and you just add the interim only, which is 495,000. 495,000. The total answer will be 742,000, which is the same answer that we have already calculated, and this is dividends paid. So you should always remember that your calculation for dividends paid should be your shareholders for dividends at the beginning plus your interim. And should it happen that you are not given interim, you are given the total dividends, it will then be your shareholders for dividends at the beginning plus your total dividends, and you will then have to subtract the final dividend. Because we know that the total dividends is made up of interim and final. So, but if you are given the interim, it will be very easy. It will be your shareholders for dividends plus your interim, and then the answer will be your dividends paid. And then the following question, under question 2, will be to prepare the following sections of the cash flow statement. So this one, we will just have a discussion on these aspects on the left-hand side, the details, the cash effects of financing activities. And the cash effects of financing activities, there are things that goes under there. You will have your proceeds from the shares issued, you will have your funds used to repurchase shares, and you will have your change in loan. Remember, the cash flow statement is made up of 3 stages. There are 3 stages there. There is cash flows from operating activities, there is cash flows from investing activities, and there is also cash flows from financing activities. So the operating activities, they are straightforward because there is cash generated from operating activities. But the investing activities, what normally poses a challenge to most of the learners is when they do not know the details. But what is it that will go under the investing activities? So under investing activities, how does the company invest money? The company invests money by buying fixed assets. And we know that the fixed assets are your land and buildings, your vehicles, your equipment. So the company invests money by buying fixed assets. So in as much as we buy fixed assets, we sometimes be confronted with a situation whereby we need to sell one of the fixed assets. And we also invest money in the fixed deposit. So hence we will have 3 things that will go under the investing activities. We have the purchase of fixed assets, the sale of fixed assets, and you will also have investment in fixed deposit. And how is the company financed? That is cash effect of financing activities. The company is mainly financed by the shares, the issuing of shares, and secondly, when that money that we get from the sale of shares is not enough, we then take out loans. So that is why under financing activities, you will have your proceeds from shares issued, you will have your funds used to repurchase shares, and you will have your change in loan.